Today we want to talk about an exciting subject, and it's a subject that's very dear to my heart because it has been part of my life for over 25 years. And we want to talk about trading stocks or securities, which includes the ETFs and other things, and how to make millions. Now, you don't want to hear stories like that or a headline like this or somebody teaching you who hasn't made millions in the stock market or in trading stocks. Because it's just a theory. If that's somebody has not made money, in the stock market. A theory is fine. You can do it on paper. Go ahead, test it, check it out. But the issue is, if somebody has really done it, you better listen. Now we all know the stories of Dan Sanger, who is the prime example, who turned in, I think, 1998, $11,000 to $18 million. Trading very high risky options and different things within 18 months. Within 2 years, that amount, those original 11,000, as he sold his Porsche, his used Porsche, he got the money, almost $11,000. It turned it into $42 million. Now, can everybody do that? Probably not. But if one person can do it, that gives us the inspiration, the encouragement, the challenge. But we can do it too. And true, I haven't done it. I have not turned that amount of money into that. And I will tell you in a little bit how I turned my money into millions of dollars. And I started with 15 bucks. Now, when you have no money, it's pretty hard to trade stocks, And so I had to use my $15 in trading goods like $1 watches, stuffed animals, and stuff like that, which was fun. But I did that for less than a year to get enough money to get going in stocks. And I tell you a secret how I didn't put up any money to make money in the stock market. But the thing is, the key important thing is, it's not easy to make money in the stock market. In a bull market, everybody can make money. Any idiot can make money because everything goes up. The skill comes in the survival over many, many years. We're talking 10, 15, 20 years. Scoring, 30 years. Scoring year after year, making money in stocks, trading stocks. And in our day and age, ETFs, exchange-traded funds, or exchange-traded notes. And we stay very solid. We don't go into futures and commodities trading. That's its own animal. And most people I know lost their shirts. So true, some make money in that, but we're not going to talk about that because that's like gambling. And you can be whacked, financially. No fun, I'm telling you. But if you like commodities like silver, gold, and oil, and corn, and cotton, today we have ETFs. And to spice it up a bit, we have leveraged ETFs. So leveraged ETFs, a triple leverage, sounds good, huh? And then if you really want to spice it up, then you go into options on ETFs, and that's another animal. But let's be conservative and let's study how you can make money on a consistent basis through trading. True, my philosophy, I'm a trader at heart, but it includes many times the same stocks over and over again. One prime example was Dell Computer in 1990. We identified it, a very good stock. We thought it has a lot of potential, and our slogan back then was never sell a Dell. You just don't sell it. And within 8 years, till 1998, that stock appreciated by 100,000%, meaning each $1,000 invested in Dell became $1 million. And those who read my newsletter back then, which was very popular back then, and back then we had television networks like FNN, Financial News Network, which became CNBC today, and all those things, it was advertised there. And we talked about those stocks, like Dell Computer, very good stock. And I was trading, you traded, you made money, and it bounced between 20 and 30. They had splits, and that's how the stock went up and up and up because of the splits. And I think they had splits every 6 months or so. But if you invested in Dell Computer, didn't ever sell, you were the winner. You were ahead of the game. And that used to be Warren Buffett's game. You only invest, you hold, you never sell. So he had to have a very good skill to select the best companies he could select. and just stick with them, buy them when they're cheap, and hopefully over the years they will go up and never will go down. And now Warren Buffett to some extent has become a trader too in certain stocks, because we make 50% in a year, or in 6 months or whatever, of course you're going to take profits. You would be stupid not taking profits, because taking profits, if you take profits, you can't go broke. And that's very important. Many people become too greedy. They ride it and ride it, and they let it ride. Sometimes it works out, most of the time it doesn't. You have to take profits. And you cannot whine about it, that afterwards the stock went up, doubled again and stuff. Yeah, too bad, But you made your first 50, 60% or 30% or 100%. And we just had that in Netflix. In August, if you watch my YouTube video on Netflix, I said, great company. I love it, In August, it was about $62, and now we're in May, but by April 2013, from August 2012 to April 2013, it went up about 254% to $220. So you could have traded it in between. You may have missed the big jumps, but if you invested, 254% or something like that, or 255% within a relatively brief amount of time, 8 months, 9 months, it's not bad. So especially you could have put in tens of millions, hundreds of millions theoretically. Anyway, you have to study the market. It's not gambling. People always say, well, the stock market is a gamble. No, it's not. It's just one of those things. We have to understand that the stock market is not a gamble. We research things, we get information, and based on certain criteria, we make certain decisions, buying and selling, or we identify a certain company, we get to know a company, their growth potential, and all those things. Of course, it's best to buy them when they're cheap, when they're inexpensive. Maybe they have a cycle up and down, over a certain period of time, or they just go up, but they never go up straight. They just go in waves, And so you have to identify when a stock seems cheap at an entry point and what the potential might be, and at a certain point you sell. And easier said than done. I know there's thousands of stocks and ETFs. Now we have a universe of almost 2,000 ETFs, I think, or more. And that is a challenge to research them, but that's what we do. We look at volume also. We want high volume stocks. I personally love stocks that have a lot of volatility. Traders live and feed on volatility. Without volatility, it's a tough market, and we had that just now. We're in May 2013, so the last few years were a little tough. You had to be very much alert, study a lot, and so forth. Now, another concept which is around, it says you only have to be right 51% of the time to make money, because you lose 49%, you're ahead. That's not true. Let's cancel that myth and let's go back to the basics, because your losses are usually much higher than your profits if you have that way of thinking. And in trades, if you have lots of mini trades, you make maybe 0.25%, 0.5%, 1% and stuff like that in trades. And then suddenly you have a loss of 20, 30%. That wipes out a lot. So let's go and focus. Do not gamble. Be conservative. Say 9 times no. Say 1 time yes when you're absolutely convinced, and go for it. And when Facebook was down to $16, $17, $18, also back in August, we had a video in August 2012. Of course, it was due for a rebound, and it did much more than 50%. It went up to about 32, 33. I don't know. But I can be wrong too. I never thought Tesla Motors much of anything, but as the company grew, as they came out with their marketing concept, their product and everything, especially the 4-door S of Tesla, great stock. That baby took off. That stock is riding high, so to speak. And my mistake, I was unable to identify it. I didn't know Elon Musk that much, what his strategy is, but he's one of the last polymathic people on earth, I would say, people that are experts in different areas, and who are geniuses. So I didn't recognize it, but that's why we read, study, and do all those things to find it out. The next important rule is don't listen to gurus. If they're on TV, have their own TV show, most likely they're not making money anymore, or if they're there for 30 minutes a day, that's fine. They have their little show, they have their little gimmick, they do it. But usually people who are on TV have their own show, and it takes a lot of work. They don't have time for trading. They can observe the market. They may have some wisdom from the past, and maybe they made money in a bull market and then didn't continue and lost it. The key is to analyze stocks, and then there's very high danger. Stocks can drop 90% in a day. We've seen that. Good stocks. Let's think AIG, which used to be such a high flyer, has come back a little bit. And major companies that went literally belly up. And like even in October 2007, for instance, Las Vegas Sands, which owns, of course, Sands in Macau, the Venetian Macau, and all those things, and Sands here in Las Vegas, the Venetian and the Palazzo, huge resort casino hotels. And that stock went from, after a nice IPO a few years earlier, went up till October 2007 to almost $150. By March or spring 2009, that stock was below $1.50. We're talking a 99% loss. Can you stomach that? I sure can't. But at 150, that stock was a bargain day and night. Everybody talking bankruptcy, and the owner of the Las Vegas Sands was buying hand over fist his own stock. In the meanwhile, it was back to about 55 or so, in that area. Even shortly thereafter, it was like, tenfold, 20-fold. We're talking a lot of money. If you calculate it, break it down on a PA basis, meaning per annum, every year the return, it's huge. But not many were very gutsy to buy it at below 150. But just an example, we watch those stocks, we watch them come down. Many stocks are often overpriced, and we don't understand it. We don't get a Netflix or at times, when they were very high over 300, we didn't get it. We didn't get a Crocs and all kinds of stocks, because there was so much things that happened over the years when we look at all those things. And there's also a rule, you want to buy low and sell high, but there's also the rule, buy high and sell higher. And if that works in a trend, we recognize trends, in cycles. Bollinger Bands is a good indicators and things like that, and there's so many components to evaluate the stock. But we study those stocks. We know those stocks in and out. We know their prices 5 years ago by heart. We know how they respond, how they react, how they to news, to earnings reports, if they miss, even if they're good, and so forth. If the profit margins are falling, that was the problem in Dell Computer. The profit margins were coming down, from 50% or whatever it was, down below, lower. That means the stock is going down, obviously. And that I'm talking about many years ago. But in the early 90s, it was going up because PC business was a big business. Anyway, another thing is, don't be reactionary. Don't be a reactionary trader. Be a responsive trader. You know your stocks. Don't fall into the hype. When something spikes, get out. Don't even touch it. And when something falls, never catch a falling knife, because you get caught. You know that. You should know that. If you ever try to catch a falling knife, you know exactly what's going to happen. You're going to get wounded and you're going to get cut. So you don't want to do that. You want to watch stocks if they're up and down, and you want to watch the cycles, even if they go up. Actually, for the camera, if they go up in this direction, up, you want to buy them whenever they seem cheap, and you analyze all the things like BlackBerry, or it used to be RIM, Research in Motion, high-flying stock, made money all the time. You could trade this thing. Earnings came out, 20% pop in the afternoon, after the market closed. And you can trade, of course, pre-market and aftermarket for those who don't know. And that's wild, wild west, but it's fun. And always, I want to say right now, always trade with limits. Never, ever trade without limits, and don't try to think that you're smarter than the market. Always with limits. And it's okay if the stock is at $10, put in a limit for $10, 25 cents, maybe, if that's the kind of stock, if you expect like a 20-30% pop. But when you sell, it's a $10 stock, don't play with games with no limit. Put in a limit for 975 and stuff like that. I'm just saying, be cautious. I know I've my experience. I've tens of thousands, hundreds of thousands of trades in my life, and they are not machine operated trades. They are manual trades. In my good days, I made in the good years, I made 50, 60, 70 trades a day. They were all analyzed, precise. My record trade is about 7 seconds in and out, making about 1%. And then there's other times where we are in there for 30 seconds, making 4 or 5%. And then we're in there for hours, and then sometimes days. But we take our profits, because if you take profits, you can't go broke taking profits. That's the saying. Now, buy stocks when they're apparently low in the cycle somehow. And you have to identify them, you have to learn about the stock and have to know them. Another thing is ETFs, the same story. If oil is very high up, you can buy a short ETF, for instance, because oil will come down. But imagine on leveraged short ETFs, there's a decay factor, a significant decay factor. They're not for investment. And so you have to calculate that. Or right now we see it with the VIX. The VIX ETFs, the leveraged ETFs on the VIX, the VIX should spike, and those leveraged ETFs should spike too. They are completely out of bounds. I'm completely out of balance. You can lose your shirt. Literally, you can lose your shirt. On many short ETFs, you can lose your shirt. But there is long ETFs, like on the housing market or on real estate, for instance, on the REITs. Even the leveraged ones, they were phenomenal since they were issued, and they went up a lot. They stalled out a little bit. You had to take your profits. And now we come to the big thing in making money. Like I said, I had no money to start trading stocks. I studied stock 10 years. I did a few trades in between, just to get acquainted. It was very complicated back then. We're talking late 70s. There's no internet. I don't think fax machines were even around. But what you had to do is you had to go to the bank, fill out a slip, and they buy it, and they tell you tomorrow if you got it or not. So forget short-term trading within minutes, jumping up and down and making money. You had to analyze and make money. And the stock I bought back then in 78, I think, or 79, it went up. I sold too early, of course, as usual, because I'm a trader at heart, too bad. So anyway, but then almost 10 years later, I started studying the stock market around late 76, 77, and then in drawing my own charts back then, by hand. And then in 88, I got it. I watched the movie Wall Street through. I watched it 35 times, and Gordon Gekko said, that's why it's a fictitious character, I know, but whatever, So he said, we do not throw darts at a board. Of course, in that movie, it was about insider trading, and we don't do that. It has nothing to do in our concept with it. It's just principles. We don't throw darts at a board. We analyze, and we do it right. Even though in that movie, Gordon Gekko says, stop analyzing. We go based on information, but that was that type of movie. Anyway, so then came the wonderful thing. It's called leverage. Now, leverage can be very dangerous. If you don't know what you're doing, stay away from it. And many in commodities market is the easiest example. You control a lot with just very little money. But leverage is a good thing, And when I started my trading, really like in 88, getting wild at it, or actually early 89, we went wild at it. And there was this opportunity in a stock market overseas in Europe. It was a small stock exchange. They only quoted a price once a day, but there was a little secret: after market action. And we had no limitations, very little regulation. Everybody got rich. That's welfare. Also, that's when I used leverage. I got a $100,000 credit line back then, and it just went through the roof. The whole thing just went through the roof. It's just amazing how we were blessed by God. Doing a lot of trades, but under those circumstances, no internet. You had to phone in your orders. They only quote one price a day. You didn't know if you got it, and so forth. And it was a long story. Who cares? But the principle is leverage. So if you can leverage other people's money, if that's legally possible for you, or you're even be gutsy, and use money that you have saved or whatever you have, don't take loans necessarily, and don't take borrowed money and all those things. That's very dangerous. It has to be like, if your friends get together or somehow your family, there's money, which you can lose, I mean, you better know what you're doing. And like I said, you have to be right 99% of the time. 51% of the time doesn't cut it. You have to be right a lot. You should not lose on a trade, very rarely. But if you lose, you have to take your losses, depending on the situation, really fast, because you lose a fortune if you don't. And we're all wrong. We can be all wrong. I once lost like $20,000-$30,000 in a few minutes in a Polaroid trade. Some friend of mine told me about it, and it's junk. And I was probably tired, didn't pay attention, cost me $20,000-$30,000. By the way, I've never lost millions in the stock market. Just for your information, made millions and millions in the stock market, but never lost millions in the stock market. I spent millions, it comes with the territory, especially when you're young, you need a nice set of wheels, and life is good, and private jets and stuff, you don't need to own them, you lease them or whatever, but you just live differently because you think it goes on forever and ever. And it's quite a challenge to keep yourself in check, When you make 50 grand a day or 50 grand a week, whatever your thing is, that's your profit. Of course, you have to pay taxes on it too. Don't forget to do that. And the thing is, it's a lot of money, but you can make millions of dollars with virtually little money. Of course, the more leverage you have, the more money you can leverage, the more money you can make, the more money you can lose. So you have to be very careful. But this is a quick lesson on trading stocks, and I just want to encourage you, you can do it. There's stock markets all around the world now. We have the internet, access to markets, information every second. We've got Bloomberg, CNBC, whatever other business network, and in different countries, in Asia, in the US, everywhere. So there's plenty of opportunity. The only sad part is there's often not volatility in the market, so we have to search for other markets that have volatility, and hopefully we get volatility back in 2013 or 14, and then we're back on track. It's never going to stay the same. So volatility will come back, and then traders will have a feast, and they will make a lot of money. And this time around, if you make money, don't spend it all. Save it, and keep it in the bank, or buy real estate, which is cheap real estate, which is inexpensive real estate, which has long-term potential. Don't throw it away. And brand new cars, buy one that's 1 year old for half the money, an Aston Martin, or I don't know what, whatever you prefer, if you have to have that. And just that's another lesson, to be smart with your money and not wasting it on new products, maybe slightly used, that are almost new. And most of the money is actually saved by spending smartly your money, And you don't need to own a private jet yourself. You can rent one in our day. There's leases, all kinds of stuff, and you can live like a king. But getting into the game is to study stocks, study the market, study the economy, and know you can be blessed. Be patient. And it's sometimes boring to sit in front of the screen for 7 hours every day, watching everything, and not one screen, but several screens, taking in information and just being diligent and disciplined, And we on the West Coast, our market starts, the pre-market, at 5 in the morning. You better be ready till about 1 o'clock. Then come earnings, if it's earnings season, in the afternoon. And the game is over about 2 p.m., maybe 2:30 p.m. Then go for your lunch and take a break, enjoy your life. And on the weekends, you're off on the weekends, Don't study stocks on the weekends. Just take off, go to church or synagogue on Sunday or whatever you prefer. And on Saturday, spend it with your family or with your loved one, with your spouse, whatever you have in your life. And also the afternoons, that's blessed. You don't need to be on the ball in the afternoon or evening all the time. You watch your futures in the evening before you go to sleep, just to make sure where we're going to open and things like that. All right, thanks so much for listening. Please email me if you have any questions. We'll try to continue with a few more precise stock trading or trading advice videos, just for your entertainment purposes, and so that you can learn about it and get informed about it and study professional literature yourself. And just like everything else, you have to learn in order to master the craft. Thank you so much. Bye-bye.